Hello, this is Paul Harris, Kitco News, from the Global Metals and Mining Conference, the BMO Global Metals and Mining Conference in Florida. I'm joined this morning by Tom Palmer, President and CEO of Newmont Mining. Morning, Tom.
Good to meet you, Paul.
Likewise. We're about 1 year on from the merger with Goldcorp. How has the integration gone? How's the merger gone? Any surprises, pleasant or otherwise?
The integration of Goldcorp into Newmont has gone very, very well. And the surprises, I'd say, are all on the upside. When we looked at the opportunities to put those 6 assets underneath the Newmont operating model, we saw a value that could come from each of those assets. And as we've gone in with our Newmont Full Potential program, which has been a very successful continuous improvement program that we've applied at Newmont over the last 7 years, and it's a very rigorous process, bringing experts from across the business to diagnose where the bottleneck is, then to design the programs that are going to work that bottleneck, and then get on and deliver those the value that can come from working the constraints or bottlenecks in each of those operations. We are seeing significant value over and above what we saw when we first did the transaction. To put that into some sort of frame for you, we committed at the announcement of the transaction to deliver $365 million in improvements at a run rate by the end of 2021. As a result of the work that we've done, both in terms of the synergies of bringing the two companies together in G&A and exploration, but also the application of Full Potential to just 2 of their assets, Penasquito and Cerro Negro, we have now committed to deliver $500 million of cash flow in 2021, and this year alone $340 million in free cash flow, that over 90% of the original commitment that we made. So a significant increase in the value and also in terms of the time of delivery. So outstanding.
It sounds a little bit more than tweaking to deliver those kind of that value. And you talked about in your presentation this morning about the drive or desire for Newmont to be the clear gold industry leader. Can you expand on that? What do you mean by that, and how will you measure that?
It has a number of facets. First and foremost, above anything else we do, it's ensuring that we're creating an environment in each of our workplaces that's fatality, injury and illness free. And in our industry, we have an unacceptable safety performance. There are still too many people killed in the mining industry, and sadly Newmont has had fatalities over their life, and some recent ones. So to be a leading gold company, you need to be able to create a culture where people can come to work, they understand the risks and they understand the controls for those risks, and they head back home to their families at the end of their time at work, safe, healthy and well. So that's a very important aspect of being a leading gold company. ESG performance, our leadership around environmental stewardship, around social engagement, around community engagement, around transparent governance. Doing those things well is part of being a leading gold company. And then being able to manage our operations and our projects pipeline so that we are sustainably delivering value for all of our stakeholders over the long term. As a result of the 2 transactions last year, we now have a portfolio and a project pipeline and a production profile that we can see going out all through this decade, into the next and into the decade after that. So we've got a wonderful opportunity as a result of those transactions to really lead this business in the long term and thinking about how we're going to deliver sustainable value for all of our stakeholders. And that for me represents world's leading gold company.
ESG is becoming an increasingly important aspect in the mining sector in general, in gold in particular. And I think it'd be fair to say the mining sector's been quite late to the ESG concepts. How important will ESG reporting become? What kind of benchmarks are you going to measure yourself against?
So Newmont have been a leader in this space for quite some time. Newmont was a founding member of ICMM, International Council of Mining and Metals. They're a founding member of PACI, the Partnership Against Corruption Initiative, and they have been working on standards and systems and processes and the culture in our organisation for a long period of time. The World Gold Council and ICMM have some clear principles that member companies have to meet in the ESG space, in the sustainability space, and Newmont have not only participated in that, we've had a hand in leading that. My predecessors at Newmont have had a strong hand in leading the mining industry in the ESG space. And part of that is reporting and transparency of reporting. And we issue a sustainability report called Beyond the Mine every year, and we look to improve upon the quality of that report and its transparency year on year. And we've been issuing that report for a number of years now. And what we can do in that space, and it goes to your world's leading gold mining company question, is we can provide through our behaviour an example for others in terms of what good transparency looks like in the ESG space.
Okay, and is part of that the desire to appeal to more generalist investors? I imagine part of the dividend policy is to attract generalist investors back into the gold space, specifically into Newmont. And so is it having a better ESG performance another means of appealing to the...
I'd see it the other way around. I think if you aren't good stewards, then you won't get the investment. It is a starting point. It is foundational.
An entry criteria.
It's an entry criteria. So it's fundamental, and it's about thinking beyond the one stakeholder group. Good ESG performance is thinking about all of the stakeholders associated with our business, ensuring we're engaging with all of those stakeholders, understanding the issues and opportunities, treating every one of those stakeholders with respect and dignity, and working with them to ensure that we are... In fact, our purpose statement talks about improving lives through sustainable and responsible mining, and that really sums up for us where ESG fits in our business.
Okay, you recently announced the investment in the first autonomous haul fleet in Boddington in Australia, and I imagine there's a strong ESG element part of that, because as you mentioned about safety and worker safety, obviously that's a key driver there to improving that. What are the other benefits you're expecting from that, and based on that, is the plan to sort of roll that out throughout the portfolio?
Autonomous haulage is something I'm very familiar with, as is my Senior Vice President who leads our Australian region. I implemented the first autonomous mine in the world 8 years ago. And my General Manager at the time at that mine is now my Senior Vice President in Australia. So we understand the technology well. It's a very mature technology, particularly in Western Australia. The safety benefits are significant. There has never been an accident, there's never been an injury with autonomous haulage. They have a fail-safe system, and you're taking people out of the line of fire or harm's way. So it is an engineering solution to one of the key safety risks within our business. But then we underpin the investment with good found business case. So the work we've done over the last 6 or 7 years at Boddington to improve its performance, to improve its productivity, to lower its cost, allowed us to bring resources into reserve and extend the mine life, to give us a mine that had a long enough life to underpin a fleet replacement. It's exactly the same story that we'll be able to follow at Penasquito over the years ahead.
So that's an asset sustainability aspect.
Yes. Now, there are significant productivity benefits. These trucks run 24 hours a day. There's no need to stop for a crib break or stop to a bathroom break or anything like that. So you get productivity improvements. There could be opportunities for other mines within our portfolio. There has to be a business case for it. Where we're looking more at the opportunity is for some of the major projects that we have in our pipeline. So we've got 2 big projects in Chile, a gold copper deposit, so very large open pit mines, and another one in Canada. And the opportunity to apply autonomous haulage as the base case and significantly improve the economics of those projects is really the size of the prize. And you can fundamentally redesign your mine when you've got autonomous trucks running around that mine. You can do things differently. You can design a mine from the start that is a much more efficient mine and a higher value mine. So that's where the real prize is.
Okay, one of your sort of messages this morning was sustainable, stable, cost discipline and productivity. The autonomous aspect very much plays into that. And making the business sustainable, the return sustainable, the margin sustainable. And again, it seems one could say mining companies coming of age, becoming a equally good investment as companies in other sectors that generate profits, that return profits to shareholders. How important is it for Newmont to be the number one gold producer from that point of view, to attract new investment from people that aren't specialist investors?
I think when I look at the business we now have at Newmont, following the 2 transformational transactions last year, for the first time, we genuinely have a business. We provided our 10-year production profile this morning. So we see a production profile at greater than 6 million ounces all through this decade, and we can see that through our organic pipeline extending next decade and the decade after. So we present a value proposition of long life that we couldn't present before. So it's something different for investors to look at, which opens up a different type of investor than maybe looked at gold previously. We're the only gold miner that sits on the S&P 500. With our increase in dividend that we announced in early January, we are now at a yield amongst our peers in the S&P 500 that is competitive. So we offer long life, sustainable, good leadership, and some returns to investors that we expect will appeal to a broader shareholder group than traditionally invested in gold miners.
It must be quite a refreshing change for investors to experience that or have that from a mining company.
I think you get it from mining companies. I think we're starting to introduce this to the gold mining space.
Okay. You mentioned your project pipeline. You've got a deep project pipeline. And with the increase in the dividend, you've got a $1 billion share buyback program underway. And you've got $7 billion of debt, give or take. Wouldn't it make more sense to invest that $1 billion in further developing your project pipeline and or paying down some of that debt? Why have you chosen to use a share buyback with that money?
So there are a few aspects there. The first one is that we run our business on the assumption that gold sits at a $1,200 price, both in terms of how we build our mine plans and what revenue we can expect. And at $1,200 gold price, we generate from our business enough cash to fund our exploration and advanced study work, to fund our development capital work, to pay down our debt on schedule, and to pay the $1 dividend. So when gold sits above $1,200, we have an ability to generate significant cash. In fact, for every $100 increase in the gold price, we generate $400 million of free cash flow every year. The share buyback last year in December, there were two things at play there. We issued our 5-year guidance, and we looked at the value. We looked at our business and the value of our business and where the share price was trading, and we wanted to demonstrate that we had a lot of confidence in our business. We also had delivered on our commitments to divest KCGM, Red Lake, Continental. So we had $1.4 billion in proceeds coming in from those divestments. So we chose to direct a significant amount of those proceeds towards a $1 billion share buyback, which represented our confidence in the business. We've already executed half of that. We bought back $500 million of shares in December. We bought them back at $40.
Okay.
Newmont today is trading over $50.
You talked about the asset divestments. You've got a big portfolio. Are there more divestments to come?
We've done the lion's share of our divestment work. There are two areas that we're still actively working on, and they'll probably take place over the first 6 months of this year. One is that with the acquisition of Goldcorp, we have quite a large, what we call an equity portfolio. And as we look at our business and the profile of our business going forward, there are a number of assets in that equity portfolio that don't fit our strategy going forward. So we're looking to divest a number of those things through the first 6 months of this year. There might be $200 to $300 million of proceeds that we'd see come from that. And then with our sale of our half of KCGM in Australia, there was a power business associated with that. So Northern Star, who bought our half, we're working with them to see whether we can arrive at a fair value for that power business in that part of Australia. So they're the only two things that we're actively working on.
Okay. In recent years, Newmont and Goldcorp separately have both been good investors in the junior exploration space. You talked about some of the divestitures. Continental was one of those, let's say, equity investments that you've divested. Do you plan to continue to invest into the junior space as and where you see opportunities, and what is the goal of those kind of investments?
Yes. The short answer is yes, and with our equity portfolio that we're bringing that together, we are still very much keeping a number of equity investments within our portfolio, and you can still expect to see Newmont invest in some equity investments, particularly in exploration as we go forward. But what Newmont do with those investments is we are not silent investors. If we choose to invest in an exploration venture, we'll provide all of Newmont's capability, experience and technical know-how to that investment. So it is still very much part of our strategy.
Excellent. Well, Tom Palmer, thank you very much.
Great, thanks Paul.
Thank you for watching. Stay tuned on kitco.com for more from the BMO Global Metals and Mining Conference.